Okay, let's unpack this. We are diving deep today into, well, one of the most explosive narratives really shaking up the financial world right now, this potential kind of shocking pivot from Vanguard. And for those of you tracking the markets, you know Vanguard, I mean, the mutual fund behemoth, right? We're talking, what, over $10 trillion?
Yeah.
A real pillar of mainstream finance, often quite conservative.
Yeah, exactly. And the story hitting all the major outlets now is that Vanguard might finally be reversing its pretty long-standing anti-crypto stance.
Big.
Aggressively anti-crypto, some might say.
And it's not just a small shift they're talking about. The headlines are painting this as a huge U-turn, suggesting Vanguard's now, I don't know, embracing crypto ETFs.
Yeah.
Or at least allowing access. And that somehow this is massive for XRP specifically.
Right. The noise is incredible. Some outlets are basically calling it confirmation of a, quote, mega bull run. It's definitely got people excited.
Okay, so here's our mission today. We've gathered all the source material on this huge rumor, and we need to cut through that noise, like right now.
Right.
We're here to figure out what's just market chatter versus what's actually verifiable fact. And maybe most importantly, what are the real, so what implications here? For crypto overall, sure, but especially for XRP, which seems to be catching a lot of this buzz.
And I think it's really crucial right up front, before we get carried away, and this is probably your key takeaway to start with, as of right now, looking at all this material, there's no official SEC filing, no smoking gun from Vanguard saying, yes, we're buying XRP or launching an XRP fund.
Okay, that's critical. No airtight proof.
No. But, and this is a big but, the story itself, the narrative power of Vanguard even considering this, it's immense. You just can't overstate its potential impact if it turns out to have legs.
Why is that? Why does Vanguard moving the needle matter so much more than, say, another firm?
Well, think about it. Vanguard's entry, or even just perceived entry, brings institutional legitimacy on a scale crypto has frankly only dreamed about. It's not just about the potential capital inflow, which is obviously huge.
$10 trillion tends to be huge, yeah.
Right. But it's also the stamp of approval. It's Vanguard implicitly telling pension funds, retirement accounts, conservative investors, okay, maybe these assets aren't radioactive anymore. Maybe they belong in a core portfolio.
It's the ultimate mainstream signal.
Exactly. I mean, when a fund managing that kind of money even whispers about a policy change, the market it reacts, sometimes violently, because the amount of capital potentially waiting to follow that lead is just unprecedented.
Okay, so let's get into the anatomy of this rumor then. Section 1. How did this story even start, and why does Vanguard carry this much weight? So the shock claim, as we're seeing it reported, is this idea that Vanguard has U-turned or maybe softened its stance, moving away from just completely blocking crypto.
Right, outright avoidance.
To now maybe thinking about allowing access, but specifically to third-party crypto ETFs.
Yeah.
What's the significance of that distinction? Allowing other companies' funds.
Ah, okay, that's the absolute crux of it, isn't it? And it says a lot about how Vanguard probably thinks about risk. By allowing access to, say, a BlackRock Bitcoin ETF, they're basically saying, look, we see the client demand here.
We hear you.
We hear you. And okay, we'll let you access it through our platform. We'll collect the fees for that. But crucially, they're not putting Vanguard's own brand, their own balance sheet, directly behind the volatility of Bitcoin or whatever the asset is.
Right, so they can capitalize on the trend, keep clients happy, maybe stop them leaving for other brokers.
Exactly.
But without taking on that direct regulatory headache or the price swings themselves, it's kind of a clever hedge.
It is. And sources like CryptoSlate, they really highlighted this point, that even just facilitating access for a company like Vanguard that's historically called crypto, basically gambling, is a massive shift.
And you mentioned Bloomberg, you Today analysts noticing the softening. Is it just market pressure then? Seeing competitors rake in billions?
Oh, absolutely. I mean, think about it. BlackRock, Fidelity, others launch these spot Bitcoin ETFs. They start pulling in billions upon billions of dollars. Vanguard has this enormous client base. And you can bet those clients started calling asking, hey, why can't I get exposure to this through you? My buddy over at Fidelity can. That kind of pressure from your own customers, it's hard to ignore indefinitely, even for Vanguard.
Okay, and then we get the XRP connection, FX Empire, for instance, drawing a direct line, saying that these potential ETF flows, this Vanguard U-turn narrative, it's specifically lifting sentiment around XRP. How does that leap happen? Why XRP?
Well, it's partly about perception and narrative, isn't it? Vanguard's name implies institutional seriousness. So if they're softening, the market starts thinking, okay, who's next in line for institutional adoption after the big two, Bitcoin and Ethereum?
And XRP has that cross-border payment story, that institutional utility angle.
Precisely. XRP has always been marketed, rightly or wrongly, with that institutional-focused payments, settlements, potentially replacing older systems. So analysts naturally connect the dots. If the most conservative giant is maybe opening the door, they'll likely look at assets already framed for institutional use. XRP fixed that narrative mold very well.
But let's just pause and really absorb the scale here. We keep saying 10 trillion, but why does Vanguard's nod matter so much, beyond just maybe pumping the price short term?
Okay, yeah, let's really break down that significance. $10 trillion under management. That's bigger than the GDP of most countries on Earth.
Wow. Okay.
So when capital of that magnitude even hints at shifting allocation, it doesn't just move prices. It can fundamentally alter market structure, liquidity, infrastructure, everything.
And it's the name, right? Vanguard is just trusted, mainstream. Their whole brand is stability, long-term investing, retirement. Not exactly moonshots and meme coins.
Exactly. Their client base isn't, the crypto Twitter crowd chasing 100x gains. It's people's 401ks.
Right.
It's state pension funds. It's university endowments. These are fiduciaries managing money very carefully.
So if they allow crypto access,
The signal is huge. It says, okay, maybe this asset class isn't just for hedge funds and speculators anymore. Maybe it's suitable for, your grandmother's retirement account. That's a profound psychological shift.
hang on though. Let me push back a bit.
Yeah.
You mentioned fiduciary duty conservative clients. Isn't there a massive risk for Vanguard here? Allowing access, even indirectly via third-party ETFs, to something as volatile and, frankly, legally murky as XRP still is. How do they square that circle?
That is the absolute core tension, you're right. And that's precisely why this third-party ETF strategy is probably the only way they could approach this. They do. Vanguard's whole ethos is low-cost, diversified indexing. Very safe, very vanilla. So what they're likely doing is balancing two things. One, their duty to protect clients from undue risk. Two, the very real business risk of losing clients to competitors like Fidelity or Schwab who do offer crypto access.
So the third-party route is the compromise.
It looks like it. They can say, okay, client, you want Bitcoin exposure? Fine. You can buy BlackRock's ETF on our platform, but we aren't managing it. We are endorsing it directly. It keeps the client, earns a fee, but maintains that critical distance from the underlying asset's risk profile.
So the symbolic shift isn't just legitimacy, it's kind of forced by competition, breaking down that institutional skepticism because everyone else is doing it.
I think that's a huge part of it. It signals crypto is moving, maybe reluctantly for some, from that fringe speculative bucket into the potential core portfolio allocation discussion.
And for the average person, the everyday investor, maybe the most important thing is just seeing it available on the platform they already use and trust.
Oh, definitely. People trust the Vanguard app, the Vanguard website. They probably don't trust some random crypto exchange they've never heard of. When you can buy Bitcoin or potentially XRP right next to your S&P 500 index fund with a familiar click, that barrier to entry just plummets. That's key for mass adoption.
Okay, but before we move on, we absolutely have to hammer this home again. The disclaimer. We're talking about the power of a story, a narrative. The reports are often speculation, analyst commentary, maybe leaks.
Right.
We have no confirmed SEC filings from Vanguard, no official press release saying we love XRP now, zero. So you, the listener, have to track this with extreme caution. Don't get swept away by headlines alone.
Absolutely paramount, that caution. The crypto market has a long history of getting burned by rumors that fizzle out. So, okay, with that caution firmly in mind, let's pivot. Section 2. Let's assume this institutional shift is happening, even gradually. What are the impacts, direct, indirect, on XRP and the wider market?
Right, let's start with XRP itself. Specific demand. If Vanguard did confirm some kind of exposure, direct buy, authorized ETF, whatever, what happens to the price? Immediately.
Well, the immediate consequence would likely be pretty severe upward pressure on the XRP price, and it's not just one thing causing it.
Okay.
First, you've got the direct potential buying. Even a tiny fraction of a percent of Vanguard's assets flowing into XRP would be, absolutely enormous compared to current daily volumes. It could just overwhelm sellers.
Right, the sheer scale again.
Yeah. But second, and maybe even more powerful in the short term, is that narrative momentum we talked about. Vanguard's seal of approval, even indirect, acts like a benchmark.
What do you mean by benchmark effect?
When a giant like Vanguard greenlights an asset, even just allowing access, it gives cover to every smaller institution out there. Think state treasuries, smaller banks, family offices, and diamonds. They might not have the resources or the nerve to be the first mover into something like XRP. But if Vanguard says it's okay, they can justify it to their investment committees. They just follow the leader. So you could see this cascade of secondary institutional demand unlocked purely because Vanguard broke the ice. And that feeds right back into that strong XRP sentiment we saw mentioned in the sources.
Okay, demand side clear. But what about the plumbing? If you have potentially trillions flowing towards crypto, the infrastructure has to keep up, doesn't it?
Oh, absolutely. That's a mandatory consequence. When a player the size of Vanguard even thinks about entering, the market, infrastructure, custody, trading, settlement, it has to level up.
Wow.
Immediately to institutional grade.
And institutional custody isn't just holding coins in a software wallet, right?
Not even close. We're talking highly audited, regulated, often third-party custodians. Think Coinbase Custody, Anchorage Digital, firms like that, using things like multi-signature cold storage, robust security protocols.
Yeah.
It's a whole different ballgame than retail.
And this ties directly into liquidity, which you mentioned before. We need deeper markets, more buyers and sellers readily available. Why is that specific liquidity depth so crucial for a Vanguard-sized player?
It all comes down to minimizing slippage. Okay, imagine Vanguard wants to buy, let's say, $100 million worth of XRP. That's a huge order for the current market.
Right.
If the market is thin, meaning not many buy and sell orders close to the current price, placing that huge buy order will rapidly push the price up against Vanguard before they can even finish buying. That's slippage. It makes the purchase much more expensive.
So they need a deep market.
Exactly. Deep liquidity means lots of orders clustered around the current price, what we call a tight bid-ask spread. That allows institutions to execute large trades without significantly distorting the price. They demand efficiency. They hate slippage.
So as an idea for listeners tracking this, watch those bid-ask spreads on major XRP exchanges. If they start to consistently tighten and trading volume picks up significantly, that's a really strong signal. It suggests the market is getting ready, becoming more efficient, preparing for potentially larger institutional flows.
That's a great practical indicator to watch. And, this whole infrastructure point connects beautifully to something concrete, something we know happened. Ripple Labs' recent acquisition of Hidden Road. Barron's reported on this.
Okay, remind us, why is Ripple buying Hidden Road significant in this context? How does it validate this institutional narrative around XRP?
So Hidden Road is essentially a prime brokerage focused on institutions. They provide the sophisticated plumbing that big players need, things like access to trading venues, credit lines, efficient settlement across both traditional assets and digital assets.
Ah, so Ripple is buying the tools institutions need to trade and hold assets like XRP?
Precisely. By bringing that capability in-house, Ripple Labs is very clearly strengthening its own institutional infrastructure. They're basically saying, we're getting ready. If big money wants to come into XRP, we'll have the rails built to handle their complex needs, compliance, credit, settlement, the works.
So that known action Ripple, investing heavily in this institutional plumbing, it directly supports the story that XRP is prepping for major institutional interest. Whether Vanguard is the first big fish or not, Ripple is acting like someone big is coming.
Exactly. It helps shift the perception of XRP from just a speculative token to an asset actively being serviced by institutional-grade financial infrastructure. And you even see how the market connects these dots. You mentioned Captain Altcoin discussing risks related to a potential Vanguard SWIFT announcement.
Right, let's quickly clarify SWIFT for anyone listening.
Sure. SWIFT Society for Worldwide Interbank Financial Telecommunication. It's basically the decades-old messaging network banks use to send payment instructions across borders. It works, but it can be slow and costly.
So when analysts link Vanguard, potentially using XRP, to SWIFT,
they're hinting at that bigger picture. Could institutional adoption of a digital asset like XRP, facilitated by giants like Vanguard, start to challenge or even replace parts of the traditional financial messaging and settlement system that SWIFT represents? It frames the Vanguard story not just as a crypto price thing, but as part of a potential evolution in global finance.
Okay, so the Ripple Hidden Road piece adds real substance. But what about the rest of the market? If Vanguard does come in, focusing maybe just on Bitcoin, ETH, perhaps XRP, does that lift all crypto boats equally?
Almost certainly not. Capital rotation is a major factor to consider here. Big institutions, especially initially, are going to prioritize.
Prioritize based on what?
Things like regulatory clarity, huge factor. Established liquidity, market cap, security track record. They'll stick to the perceived blue chips first.
Which means money could flow out of other crypto assets.
It's a real possibility. You could see significant pressure on smaller layer 1 platforms, maybe less established altcoins, even some stablecoin projects, as institutional capital floods towards the few assets included in these big ETF products or approved on platforms like Vanguard.
So if Vanguard only offers access to BTC, ETH, and maybe XRP ETFs, those three could soak up the lion's share of new institutional money, potentially leaving the rest of the altcoin market behind, at least initially.
That's a very plausible scenario. Concentration of capital is common when institutions enter a new market.
And finally, the unavoidable consequence, regulation. If Vanguard puts its weight behind anything crypto-related, the regulators are going to swarm, right?
Oh, you better believe it. Intense scrutiny. SEC, CFTC, global regulators, they'll be watching Vanguard's every move under a microscope.
Is that good or bad?
It's probably good in the long run for maturity, but it definitely increases the pressure. They'll demand rock-solid KYCML, know your customer, anti-money laundering checks on everything. They'll pour over the custody solutions, the ETF structures, the compliance frameworks. Vanguard cannot afford any missteps here. Their reputation depends on squeaky clean compliance. It raises the bar for everyone operating in this space.
That intense scrutiny, that need for absolute perfection, is actually a perfect lead-in to Section 3. We need the counterbalance here, the skepticism, the risks, the reality checks, because this is far from a done deal.
Absolutely. And the first big reality check is what we could call the specificity trap. The headlines shout, Vanguard embraces crypto. It sounds like they're buying everything, but we have to be precise. Even if Vanguard does allow access to crypto ETFs, like we discussed, that does not automatically mean they will allow access to an XRP-specific spot ETF.
Right. They could very easily just start with Bitcoin, maybe add Ethereum later. Those two have much clearer regulatory standing in the U.S., especially Bitcoin. They have established futures markets, much deeper liquidity.
Exactly. Why would a super conservative firm like Vanguard wade into the ongoing legal battles and regulatory uncertainty surrounding XRP when they have safer, cleaner options like Bitcoin available? It's a basic risk calculation.
Their fiduciary duty might actually compel them to avoid XRP initially, wouldn't it?
You could certainly argue that. So we cannot assume XRP is included just because crypto is mentioned. We need to see the specific assets listed in any official Vanguard policy or product offering. Assuming XRP is in the first wave is pure speculation at this point.
Okay, specificity trap noted. What's the next dose of reality?
Timing. And internal hurdles. Vanguard isn't exactly known for being nimble, is it? It's a massive organization steeped in decades of, well, cautious financial practice.
Bureaucracy.
Let's call it rigorous process. Their internal compliance reviews, their legal vetting, getting board approval, structuring new funds or platform access, getting regulatory sign-offs. These things take time. A lot of time.
So even if they decided today they wanted to offer XRP access, it wouldn't happen next week.
Absolutely not. We could be talking many, many months, maybe even longer before anything becomes publicly available. Any small snag internally, any hesitation from regulators could cause significant delays. This creates a huge timing risk for anyone trading purely on the rumor.
And that delay interacts with another risk, doesn't it? The external factor, SEC approval for XRP spot ETFs themselves.
Critical point. Vanguard's internal policy doesn't matter much for an XRP ETF if the SEC doesn't approve one from any provider. If those ETF applications get rejected or just delayed indefinitely because XRP's regulatory status remains unresolved.
And the whole Vanguard narrative driving XRP could just deflate. Instantly.
Right. The momentum is currently based on the hope of twin approvals, Vanguard access, and SEC green light for the product. If the SEC part fails, the rumor-driven pump could reverse very, very quickly, regardless of what Vanguard decides internally. You need both catalysts.
And we also have to remember, these kinds of institutional rumors, sometimes they're indeed, well, maybe they're strategically leaked.
It's certainly possible. Think about it. If a huge institution is planning to enter a market, what do they need? They need liquidity. They need trading volume so they can build their position without causing massive slippage. Generating buzz with rumors can help create that liquidity.
So the rumor itself can be a tool for market preparation.
It can be, which is why, again, for you listening, for the learner, you have to approach this knowledge very, very carefully from a financial perspective.
Okay, so let's get really practical. Actionable takeaways. Given all this uncertainty, what's the main message for someone interested in this?
Simple message, hard to follow sometimes. Do not bet the farm on rumors, please. You are tracking a potentially powerful narrative, yes, but it is not a confirmed catalyst yet.
It's information to monitor, data to analyze, but not a guaranteed win.
Exactly. So if you do decide you want some exposure based on this narrative, position sizing and risk control are absolutely everything.
Explain that. Why is position sizing so critical here?
Because the market reaction to headlines, both positive and negative, can be incredibly violent and sudden. If a counter headline drops, Vanguard denies crypto plans, or SEC rejects XRP ETFs, the price could drop drastically in minutes. Position sizing means only risking an amount of capital you are genuinely fully prepared to lose if that happens. It's about survival when dealing with this kind of speculative news flow.
And the other hard truth.
Patience. Macro timeframes. This is maybe the toughest adjustment for people used to the speed of crypto. Institutional adoption, these big policy shifts, deploying billions or trillions of dollars. This stuff happens over quarters, over years, not over hours or days.
We're checking our phones every 5 minutes, but Vanguard's investment committee meets quarterly, right?
Something like that. Their time horizon is vastly different. So you need to cultivate patience and think in terms of months and years, not just the next price candle.
Okay, that focus on patience, on waiting for confirmation, leads us perfectly into the final section. Section 4. How do we actually monitor this? What are the signs to watch for? And how can we frame the possible outcomes?
Right, since we can't just trade the rumor blindly, we need verifiable, trackable indicators, hard evidence.
So what's top of the list? What's the most concrete thing to look for?
Official documents, paper trails. You need to be looking for actual Vanguard filings with the SEC. Look for official prospectuses for their funds. Read their official press releases and policy statements. Search for keywords like digital assets, cryptocurrency, maybe even XRP within their mandated disclosures. That's proof.
Okay, official Vanguard docs first. What else? What if Vanguard stays quiet but the market moves anyway?
Then you watch the other big players. Specifically, look for actual ETF applications being filed for XRP by the major fund sponsors. We know who's active in this space: BlackRock, VanEck, Bitwise, Fidelity, ARK Invest.
If one of them files for a spot XRP ETF.
That is a massive concrete catalyst in its own right. It confirms serious institutional intent to bring XRP into the regulated financial system, regardless of Vanguard's specific stance at that moment. It validates the broader institutional push.
Okay, filings and applications. What about on-chain? What can we see happening directly with the XRP ledger?
Yeah, on-chain data is crucial here. You want to look for large XRP movements, what people often call whale tracking, but specifically pay attention to the direction. Are huge amounts of XRP moving onto exchanges? That might suggest potential selling pressure or preparation for trading. Or are massive amounts moving off exchanges into known custody wallets or new inactive wallets?
And why is moving off exchange bullish?
Because it typically signals accumulation for long-term holding. Retail traders often leave coins on exchanges for quick access. Institutions or large whales planning to hold prioritize security. They move coins to secure, often multi-sig cold storage solutions managed by regulated custodians. Seeing large, sustained outflows from exchanges to custody is often interpreted as smart money accumulating and taking supply off the market, potentially ahead of an expected positive event.
Consolidation, basically.
Yeah.
Taking chips off the table.
Exactly. And the final piece is that volume and liquidity dynamic we discussed earlier. You need to see high, sustained trading volume, not just a one-day spike accompanied by those bid-ask spreads getting tighter and tighter.
Why sustained volume?
Because it shows consistent interest and participation, suggesting the market is deep enough to absorb large institutional orders without causing chaos. Tight spreads plus high volume equals an efficient, institution-ready market. That's the trifecta you're looking for. Official filings, on-chain accumulation, and deep, liquid market structure. And for listeners who really like to get into the weeds with data analysis, there are even more specific metrics you could track.
Okay, give us some deeper analysis ideas.
Well, you could go back historically. Look at previous dates when Vanguard plus crypto ETF rumors spiked. Chart XRP's price and volume around those dates. Did those rumors lead to sustained price increases, or were they just quick pumps that faded? That gives you a baseline for evaluating the current excitement. Is this time different?
Analyzing past rumor cycles. Smart. What else?
Whale tracking, but more granularly. Track the flow of funds between large wallets. Are specific clusters of wallets, potentially linked to institutions or custodians, consistently accumulating? Tools exist to help visualize these large movements. Look for patterns beyond just exchange inflows-outflows. Another good one, compare ETF inflows. Billions are flowing into Bitcoin ETFs, maybe Ethereum ETF soon. Track that total inflow into the approved crypto ETFs versus XRP's market share or price performance. Is XRP just getting lifted by the general crypto tide rising? Or is it actually capturing a distinct slice of investor interest, maybe outperforming Bitcoin on high volume days? That tells you if the market sees XRP as a primary beneficiary or just riding coattails.
How about derivatives? Futures markets?
Definitely. Derivatives often lead the spot market. Monitor open interest, that's the total number of outstanding futures contracts on XRP futures and perpetual swaps. Is it rising significantly and staying high? That suggests sophisticated traders, potentially institutions hedging or speculating, are building large positions expecting a major move. High, sticky open interest often precedes volatility. Also watch funding rates on perpetuals.
And finally, correlations.
Yeah, run correlation analysis. How closely is XRP tracking Bitcoin's price, or Ethereum's, or a basket of altcoins? Pay special attention during periods when these Vanguard rumors are intense. If XRP starts to decouple, meaning its price moves more independently of Bitcoin than usual, it suggests the XRP-specific narrative, like the Vanguard potential, is having a unique impact, driving asset-specific flows. If it just moves in lockstep with Bitcoin, the rumor might be less impactful than general market sentiment.
Okay, that's a great toolkit for monitoring. Now let's try to synthesize all this into potential future paths. How should we frame the possible outcomes based on the sources? What are the scenarios we need to prepare for?
Based on everything, I think we can outline three main scenarios, ranging from bullish to bearish.
Okay, lay them out. What's the best case? The bull scenario.
The absolute dream scenario for XRP holders. Vanguard explicitly confirms support or access for XRP, maybe via approved third-party ETFs. And crucially, the SEC gives the green light to one or more spot XRP ETFs from major issuers like BlackRock or Grayscale. This dual validation institutional access plus regulatory clarity would be immense. You'd expect significant capital inflows, strong narrative momentum, and potentially XRP breaking through major long-term resistance levels.
Well, okay, that's the moonshot. What's the more grounded middle path, the moderate scenario?
This is probably more realistic, at least initially. Vanguard does soften its stance, allows access to some crypto ETFs via third-party providers, but because of their cautious nature and the regulatory situation, they stick primarily to Bitcoin and maybe Ethereum to start.
So XRP isn't directly included at first.
Right. In this scenario, XRP benefits mainly from adjacency. The overall crypto market gets a legitimacy boost from Vanguard's involvement, more capital flows into the space generally, and that rising tide might lift XRP somewhat. It gets stability, maybe some positive sentiment spillover, but it's not the primary target of the new Vanguard-facilitated flows.
Okay, plausible. And then the necessary reality check, the bear scenario. What does that look like?
The bear case has a few potential triggers. One, Vanguard just, changes its mind. Maybe internal risk committees kill the plan, or they decide the regulatory hassle isn't worth it, and they publicly reaffirm their old anti-crypto stance or limit exposure so much it's negligible.
Or the external factor bites.
Exactly. The other big trigger, regulators, specifically the SEC, continue to push back hard against spot XRP ETFs. Maybe they deny applications outright or delay them indefinitely. Without that regulatory green light, the institutional case for XRP weakens significantly. And the Vanguard rumor, even if partly true regarding Bitcoin, loses its specific power for XRP.
And the result in the bear scenario?
The initial hype evaporates. The headlines fade. The speculative capital that rushed in on the rumor rushes back out just as quickly. The price likely retraces significantly, and we're back to waiting for the next narrative cycle.
Okay. Bull, moderate, bear. That gives us a good framework. This has been a really critical deep dive, I think. We've covered everything from the sheer scale of Vanguard and that inherent tension with their conservative mandate, all the way down to the nitty-gritty of checking on-chain liquidity depth and tracking whale wallet movements.
And I think to just summarize the absolute core takeaway here, it's understanding that dual nature of this story. You've got the undeniable psychological power of these huge institutional names. Vanguard's potential entry alone shifts sentiment and brings legitimacy.
Wow.
But on the other hand, you have the absolute critical need for verifiable facts. You need the paperwork, the SEC filings, the official prospectuses, the actual measurable signs of institutional money flowing in. The narrative is powerful, but proof is essential.
So the key lesson is really about monitoring those specific catalyst events, isn't it? Watching for the filings, tracking the regulatory decisions from the SEC, looking for those tangible signs of institutional activity we discussed.
Exactly. That's where your focus should be, rather than just chasing the latest headline. And until that proof arrives, you have to assume that the high volatility, the potential for sharp reversals based on rumors, remains a core feature of this market.
Which brings us perfectly to our final thought for you, the listener, to mull over. Considering everything we've just discussed, the speed at which this market reacts to exciting headlines versus the notoriously slow, methodical pace of large institutions like Vanguard and regulators like the SEC. If this current wave of hype doesn't pan out, if the confirmations don't arrive soon, how fast could this momentum reverse? Are we talking days, hours, weeks? Something to think about, that tension between market speed and institutional patience as you continue to watch the Vanguard story unfold.